2 minutes away from the end of the trading day on this Thursday. I'm Alix Steel. Alongside Romaine Bostick, we're counting you down to the closing bell, here to help us take us to the bell and beyond with a global simulcast. We're joined now by Scarlet Fu here in TV, Tim Stenovec and Jess Menton joining us over in radio. We're bringing together our Bloomberg Television, radio, and YouTube audiences worldwide to parse through the most crucial moments of the trading day. And Tim, you know what? The most crucial points were like the last hour and a half.
Yeah, I completely agree. I think there were two crucial things that just happened in the last 90 minutes. One, some hawkish Fed speak from none other than Neil Kashkari saying, wait a second, we might not get the data that we need in order to justify any rate cuts so far this year. And then, of course, Alix, I mean, well into what you talk about each and every day, the price of a specific commodity, none other than Brent crude, spiking through $90 a barrel for the first time going all the way back to October. I think that's got investors a little skittish.
And just looking over at the major indexes heading into the final minute here before the close, the S&P 500 and the Nasdaq 100 both down about 1%. So if the S&P holds on to this, it would be its first 1% decline in about a month, Scarlett.
Yeah, even with the hawkish talk, though, from Neil Kashkari, you would think that that would send yields in the other direction, but you have yields declining. So it really just goes to show how the comments out of Netanyahu really sparked a flight to safety when it comes to bonds and, of course, oil moving up.
I think also what's interesting is where you saw that movement in particular. You saw some really interesting moves in the longer end of the yield curve here, and that has been a really risky place for some place that is supposed to have been safe over the last year and a half or so. So into jobs day, let's see if some of these moves continue.
Yeah, and you have to wonder, too, what is now the pain trade into jobs? Speaking of, that is the closing bell on this Thursday. When you open up tomorrow, we will have those job numbers in hand. We're looking at a negative down day. It was really a sell-off into the close, with the S&P down by about 1.2% as we settle out here. The Nasdaq up at 1.4%, and volume quite heavy, Tim, throughout the day.
Yeah, taking a deeper look into the S&P 500 right now, 75 stocks only in the green today, 428 stocks in the red, Scarlet.
Yeah, and if you look at the IMAP, it's pretty clear. The pie is almost completely red, at least if you look at the 11 sector groups in the S&P 500. There are a few slivers of green. I'll just highlight where they are. Real estate management up by 0.6%. Autos and components up by 0.5%. But you're slicing it really thin when you get to that point. In terms of the big sector decliners, tech off by 1.7%. Healthcare losing 1.4%, along with communication services.
All right, well, let's take a look at how some of the gainers that I kept an eye on actually moved lower in the day. I think they're all going to stay in the green. They certainly are. Meta Platforms is the one I wanted to start with. It was on track for much of the day to close at a new record, but ended up selling off with the rest of the market. Still, shares closing higher by more than 0.8%. It was as high by as much as 4.6% earlier in the session. This after we saw price target increases from Jefferies and RBC. I do want to take a look at shares of Levi Strauss and Company. Okay, this is something I learned, guys. Did you know that baggy jeans and denim skirts are back?
Yeah.
Oh, Tim.
Tim, where have you been? You live in Park Slope.
So
I'm
are white
disappointed.
sneakers.
Dude, man.
What is this,
He's so
junior
excited.
high? Like, this is what I wanted to wear in junior high, like the baggy pants my
The
parents
90s
would
are
let me
back.
buy.
90s are so back.
Chokers.
All right.
Love it.
No?
True.
I guess I gotta
Yeah.
get on the TikTok and see what the kids are doing these days. Yeah, so actually, denim skirts and baggy jeans really helped Levi Strauss in the most recent quarter, in addition to cost-cutting measures that the company did implement. Shares finishing the day higher by more than 12.3%. Finally, some deal news, potential deal news, we should say, moving shares of HubSpot higher on the day. Reuters did report earlier in the session that Alphabet is talking with financial advisors about potentially making an offer for HubSpot. It's the marketing software company, and it would be valued at roughly $34 billion. Shares of HubSpot closing today just shy of 5%.
Trying to move over from denim skirts and baggy jeans here, but I'm going to point out Fry's producer Lamb Weston, ticker symbol LW on this. It's down 19% today to the close. This is its worst percentage drop on record. If you do look at this, its quarterly sales did meet Wall Street expectations. It also cut its fiscal year sales and profit forecast. So you're seeing that stock very under pressure today. Another one I have to point out is Hertz Global. HTZ is the ticker symbol on this. So Goldman Sachs ended up cutting its its rating on the stock to sell from neutral. But the broker also raised its recommendation on its rival Avis from neutral to sell. So you are seeing that stock under pressure as well. But you do see Avis actually turning higher today based on that. And then lastly, I'm going to take a look at Block. So obviously we know this is a payments company. Morgan Stanley did cut its recommendation on shares to underweight from equal weight. It did say the downgrade did reflect limited additional opportunity for the company's Cash App to expand its banking credit services. Shanali.
Yeah, I want to talk about the bond market now because it was one of those days that the bond market was really wagging the tail here. And you had the bigger moves actually not even on the shorter end of the yield curve. The 2-year yield down by about 3 basis points to 464, but you saw about 4 basis point moves or more on the longer ends of the curve. 430 on the 10-year now, 20-year 457, 30-year at 446. So a bit of a haven trade at a place of the market that's been seen as a little riskier these days.
So moving ahead, you got to wonder what's going to drive the market more. Is it going to be Fed speak or is it going to be comments out of the Middle East with regard to what could move oil prices?
Yeah, I think that's a really good question. I think tomorrow the focus is on jobs and, what kind of surprise we get would actually spook markets. I think it would have to be a really big surprise, either the upside or the downside, Alex.
Yes.
I don't see, given that we got some hotter than expected numbers over the last couple of months, and it didn't really move things in terms of the way that investors were thinking about rate cuts. But what I do think is interesting is sort of the change in tune that we got from Kashkari earlier today.
Yeah, I was definitely focused on Kashkari. However, Halima Croft over to RBC had a note out that was quite worrisome this morning. She was saying that there's a risk that Iran's going to have a more serious response and then target Israeli leaders more directly, and that could be a material risk and really move up the ladder in terms of geopolitical problems, and that's going to be huge. But it's hard to price that in. Maybe you can do that a little bit with oil, but it's hard to price in those exogenous events. So then you have to go wind up looking for just the jobs number and Kashkari and looking for maybe no cuts and go that way.
Of course, also keeping a close eye on the bond market. To Shanali's point, at a certain point earlier this week, you saw the 10-year Treasury yield move about 20 basis higher from where it had ended last week. Obviously, it's come off from that. It's around 430 at this point. But even just looking at today's sell-off, Alex and I were actually chatting about this yesterday. It's been about 281 trading sessions since the last time the S&P 500 actually saw a 2% decline. So that was a little over a year ago. So even with today's sell-off, and it's down more than 1%, that's its biggest loss in about a month there.
Well, we spent quite a bit of time this week talking about the new minimum wage law in California, which saw an increase of 25% for a minimum wage from $16 to $20 an hour. And as a result, we've seen some companies raise prices. We've seen a lot of companies try to figure out, okay, how can we make things more efficient? You have one fast casual chain based in Guatemala but has restaurants here in New York, a fried chicken chain. It's called Pollo Campero. I don't know if you guys have ever been there, but what they're doing is they're redesigning their stores to make it more efficient for the people who work there. So they're actually, instead of walking 18,000 steps in a single day, which is more than 3 miles. I'm shocked that people who work in fast food are walking that much. That's just so much to walk, down to 9,000 steps a day. And it's saving time. And of course, it's saving on labor.
Wow, this is an amazing story here, and just seeing in general what it could mean for those particular label costs here. But actually, Tim and I were speaking with an executive from Verizon earlier, just talking about how they're implementing when it comes to AI in their technology and what it could mean when it comes to labor productivity, but then also customer service and what that could basically mean as far as making things more efficient. But then also he was actually telling Tim and I that most of their customers, some of their top questions are they don't necessarily want it to dramatically to everything move to AI because they still want to talk to customer service representatives.
Absolutely. Have you been to places where you can order through kiosks? Most of them don't work
No,
half the
thanks.
time, and then you have to get in line anyway to talk to the person, except that person is overworked, no matter if they're taking 19,000 steps or 9,000 steps.
Yes, 100% preach. Totally agree with you. But I think it also points to the fact that revamping kitchen restaurants is really hard. This is why it was so hard for McDonald's to do any kind of all-day breakfast thing, because it's not as simple as flip the burger here, do the eggs over here.
Did it take years for them to roll it out across the entire company?
Yeah, no, it took a really long time because it's super complicated. So I thought that kind of choreography was quite different. But I also wonder if they can't increase costs and if prices keep rising and the productivity gains kind of wear out, then do they have to lay people off? What's the next trigger that they can pull?
Certainly dealing with macro challenges as well as consumer preferences changing. Speaking of consumer preferences, hard pivot. Did you know, guys, that Kiss is selling its music catalog here to a firm that is trying to use that brand and make it last through the generations. I wanted to talk about this story because, Tim, just like those jeans that you were talking about, you might not know that my 9-year-old niece actually has Kiss as her favorite artist.
Really?
So that is
Wow.
another one.
Not Tay-Tay?
Is that like a
Isn't that
normal
amazing?
thing?
9 years old.
A
Oh my
9-year-old?
God.
You know, you have to go to Brooklyn and see if the rest of the school thinks so. But like at the same time,
lives in Brooklyn.
it is, you can see how you can keep making money off a brand like this, and why, frankly, this is a really hot new private equity play. Frankly.
Yeah, I mean, it's just the latest in a line of singers and songwriters selling various portions of their catalog for many hundreds of millions of dollars.
I would argue that Kiss's
IP.
name, image, and likeness is more valuable than its song catalog. Can you name a Kiss song?
No, I actually
but I
had to
know
look it up.
exactly what Gene Simmons and everyone look like,
Right.
right? Yeah.
Exactly.
All right, guys, that is going to do it for our cross-platform coverage of today's market close. But don't go anywhere because Bloomberg TV continues its coverage, as do we here on Bloomberg Radio and Bloomberg Originals. Meantime, catch us same time, same place tomorrow. Happy Almost Friday, everyone.